What's up, y'all? It's Jordan Martin with Martin Investment Group. This video is going to be quick and to the point. It's going to cover how to know when you have a support and resistance break, when to actually take the trade. All right. So, one of the things you have to note and understand within yourself is that you're not going to win every single trade. You're not going to always be right, but you can still manage to be right most of the time by following a couple of rules that you set for yourself based on your trading experience. Right. And so this is some of the things that I've seen and things that I've tested. So this is where the back testing comes in heavy. If you're unfamiliar with back testing, all that is just taking past data, analyzing it and breaking it down to create strategies and then testing those strategies. All right. So you can back test, you can do things such as try different indicators, try different ways of using the candlesticks where you can create some sort of consistent process for yourself where you'll be able to see the rewards and reap the rewards you want. So again, I'm not perfect. I don't have a magic genie that tells me when to get in and when to get out, but I do manage to maintain about an 80% win rate on my trades because, like I always tell people in my group, I'd rather be late to the right party than early to the wrong party. And what that means is I just like to wait on a little more confirmation, and I'm fine with sacrificing maybe 10%, 10% of gains and waiting to make sure that my move is correct, right? So we're going to look at SPY right here. And this is today's price data. Well, on the 5-minute chart. So we have a couple of days recently. But one of the things I want to note is when it comes to, support and resistance breaks, we see we have a support area established here as well as right here. And we can mark that one out as well. And we'll just change these colors. We'll let green be our support color. And then we can have red be our resistance. Okay. So one of the things to note is different ways of looking at it. So one thing I think about is I'm thinking about a 2 candle continuation. Okay. And that's something that I've come up with. Not to say nobody else has ever thought of that idea, but I've started looking at 2 candles making lower lows or higher highs to confirm myself that we're going in that direction. So that's late to the right party, but you know, not early to the wrong one. So when we're looking at SPY, we see our first support right here. We have the bounce, right? So we have 2 bounces of support. So we clearly see this area of support. We break through and come back and hold it as support again. And let me make it easier to see on my chart. All right. And then we touch it again. So 2 support bounces again. And then we break through the support and we come and touch this level below. All right. So the reason I wouldn't take this trade on this initial support break is because we've established that this area below at 412 is going to act as support as well. And the risk to reward is very unfavorable for me to try to buy puts or short when we have another support that's about 10 cents away, right? So there's no point in doing that. I can easily get stopped out very quickly. So what I want to look for is once we did another candle that breaks the lower support, I want to see 2 lower lows get made, right? And so what I have is we form a low at 411.78, and then we push up on this candle. We push up very high. We come back down, and this candle ends up making the low at 411.77. So a 1 cent low. I'm not going to take that. And then we see the candle closes back inside the range of the previous candle, and then it bounces back up. Right. So for me, again, coming with that, lower lows need to form. I want to see 2 consecutive lower lows, and technically we did, but it was by 1 cent. Right. So I like to see on SPY when it's a stock that has such a large price to it, right? It's 400 something dollars, right? 412. If it was a stock like Ford or Snapchat or something that's below the $20, below the $30 range, then 1 or 2 cents could be my signal to get in because that's a bigger percentage of that move. But for something like SPY, 1 cent is not going to trigger me. So I'm looking for about 5 cents or so on SPY for me to go ahead and follow in. All right, we see we bounce back up and we test the resistance level, right? And we break through that resistance. The reason I don't enter the trade is the same thing. I want to see 2 candles higher highs right here. So we do get the break, and then we don't get another high made. So I don't enter, right? And we see it reverses back down, and we do get 2 lower lows, which you could enter puts and carry it back down to the support, which would have been a profitable trade to take. The rejection, even though it was a failed breakout, right? And you get the same thing over here, where you have a rejection again of that resistance. You get 2 lower lows, and you can enter and carry it back down to support. And that's another profitable trade to the downside. Okay. Now we break that support again, but do we get 2 lower lows after that support break? Right. So here we had the support break candle, and then we had this low. Here we do the same thing, right? And so this one could have been a stop out, right? So you could have got in, you had this break, you have this start pushing down, and then this candle goes bullish engulfing, right? So that would have been a loss on the trade if you took that, and that's fine, right? Again, we understand we're not going to win every single trade, but we want to make sure that we're not staying in off of hope that it's going to flip. We recognize reversal patterns and reversal candlesticks, and we exit. So when we have this short position or put position we get in, and then the candle forms a bullish engulfing candle, it's time to get out, right? We're getting bullish formations when we're in a bearish position. You don't want to hold that. Okay. And then we come back, test the resistance again, and we get our 2 lower lows. We can enter the trade, and it's another profitable trade on the move back to support. All right. So that would have been, I believe, 3 profitable trades now, 1 losing trade. And then we finally break the resistance on this candle here. We get our higher high on this candle, and we take it on up to retest this higher trend line, which would have been a profitable trade to the upside, or longs or calls, or if you bought shares. All right, so now we're 4 profitable trades, 1 losing trade. Okay. And so you can essentially repeat this, and that strategy in itself has shown to be profitable over this about 5-day span we're looking at on the 5-minute chart. We break back through what was resistance, turn support, right? We get our 2 lows, we get our lower low candle here, and you can enter short. It comes back, retests, holds as resistance, and you can profit on the move back down to this original support. So now we're 5 trades, I believe, profitable, and 1 trade that was a loss. Okay. So that's how I would look at support and resistance. That's how I do look at support and resistance, and how I'm determining whether or not I want to take the trade or not. Again, have more confirmation, and that's going to lead to me having less false breakouts that I'm getting in, right? Because there's plenty of false breakouts. Personally, especially because I run a group chat where I call trades out, I want to make sure that my win rate is very high, and I'm taking very high quality, high probability trades. Now, the second way to look at this is with Heikin-Ashi candles. Okay. And with Heikin-Ashi candles, one of the things you'll notice is before a trend reversal, you'll start to see that the candle will wick in the opposite direction. So when the trend is strong, you won't see wicks in the opposite direction. For example, if we zoom in right here, we'll see there are no upper wicks on these candles on the way down. Okay. And by the same token, there are no lower wicks on these green candles, right? So one of the ways I'm looking at this as well is I want to have that break of support or that break of resistance, and I still want to have 2 candles that come without a wick in the opposite direction, right? So with this support break over here, we have no upper wick. This second candle does produce an upper wick. We don't get in the trade, right? And this ends up being a false breakout. Okay. We have another test of resistance here. We get a lower wick on our next Heikin-Ashi candle. Failed breakout. We don't take a trade. We come back here, another break of the support. Okay. Test support, broke support, 1 candle with no upper wick. This candle does have an upper wick. We don't take the trade. and there was a failed breakout, right? So that just prevented 3 potential losses, right? 3 potential losses prevented by using that 2 candle wick strategy. Now we get our break of resistance, right? 2 candles, no lower wicks, which means we're good to go. And this ends up being a profitable trade. Okay. We have the rejection of the trend line, 2 candles with no upper wick, red candles, no upper wick means we're trending strongly down, and it continues down, another profitable trade. Okay. So using those 2 strategies, you can improve your win rate, take fewer trades, make more profit because you're able to size into your trades more because you're more confident in the probability of success for those trades. So as always, if you have any questions, feel free to put them in the comments. I teach things like this every week in my group chat, and that link will be in the description below as well. Always happy to help. And this is Jordan Martin with Martin Investment Group.